You're sitting in a trading room in New York. Screens are flashing red. Tweets from Washington are rolling in faster than trades can settle, and all eyes are on the Federal Reserve. Welcome to the high-stakes drama of 2025, where politics, central banks, and global markets are colliding in a way we haven't seen in years. And at the center of it all is one burning question: will the Fed cave under political pressure? Let's rewind. For months, U.S. President Donald Trump has been vocal about one thing he wants: interest rate cuts. He argues that high borrowing costs are slowing down the economy, hurting American competitiveness, and of course, weakening his political leverage ahead of the next election. But here's the twist. The Federal Reserve was designed to be independent. Its job is to fight inflation and support stable growth, not to bend to politics. Yet history shows us something uncomfortable. Every time politics leans too heavily on the Fed, markets tremble. And traders aren't waiting for a press conference. They're already betting. Look at the EUR USD. The euro surged as investors piled into the idea that the Fed will eventually have to cut. Global markets, from bonds to commodities, are pricing in a softer US dollar and looser monetary policy. But here's the catch: one wrong inflation print, one surprise in the consumer price index, and that entire bet can flip. Suddenly the euro falls, the dollar surges, and traders are caught in the storm. Panic sets in as news breaks. Traders scramble to adjust their positions. The once optimistic sentiment turns sour and the air buzzes with tension. As the figures on the screens fluctuate wildly, decisions must be made in seconds, each one carrying the weight of risk. The storm has arrived, and in the chaos, fortunes are won and lost. With every tick of the clock, anxiety grows. Traders are glued to the screens, watching their investments evaporate as volatility reigns. One moment hope glimmers, the next despair looms large. Decisions made in haste could lead to disaster or a miraculous recovery, leaving a lasting mark on this chaotic day. In the end, this story isn't just about interest rates, it's about trust. Trust in central banks, trust in political independence, and trust in the global financial system. So, as we move deeper into 2025, one question remains: who holds the real power, the politicians or the markets? Stay ahead of the curve. Follow us for more global economic insights, market breakdowns, and strategies you can act on. Like, share, and drop your thoughts in the comments. Do you think the Fed will bow to political pressure? As tensions rise, the influence of political agendas on economic stability becomes more pronounced. Investors scramble to decipher signals from both Washington and Wall Street, keenly aware that every decision could shift the balance of power. The stakes are higher than ever, and the world watches closely to see what unfolds next. As we navigate through these uncertain waters, questions linger about the foundations of our financial systems and the integrity of those who govern them. Public sentiment grows louder, echoing calls for greater accountability from both politicians and central banks. As protests emerge in cities across the globe, people express their frustrations over economic inequality and demand